Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. As usual, this is daily video from the ForexPeaceArmy.com. It's dedicated to the forex market, and today we again will take a look at the euro currency. It's our favorite picture that we're talking about already a couple of months probably, and we're still waiting when the downward drop will finally happen. So week by week, euro currency stands closer and closer to that moment, but still it stubbornly holds. Stands above the 1130, about the 111 area. So market just doesn't want to lose this position, and all power applied to stand above it. But slowly, it is losing the purchasing power, and as you can see, market's stronger and stronger is trying to press price down, and we see that in recent couple of sessions in the current week, you see market almost has erased the rally that we've got on the non-farm payrolls release on Friday. So it seems that our suggestion about the real picture around the non-farm payrolls is confirming, because as you know, as we said in our weekly research, that although the first reaction was like it was negative non-farm payrolls data, was poor numbers, just because they have missed in expectations a bit. But we said that probably this reaction will be very short term, because we do not treat these non-farm payrolls release as the poor. Yes, the numbers was slightly worse than expected, but if you take a look on the curtain, you'll see that the participation rate with this non-farm payrolls report, as the wage inflation, the wage growth, stands really nice. And this in general makes not quite sufficient numbers are not so important, because the major factors that right now Fed is watching for and markets looking at, they are very nice. That's why, as you can see, right on Monday, market has turned down again. On Tuesday today, as you can see, drop is continuing, and market almost has raised the whole Friday session range. So as you can see, market stands very close to the bottom. As a result, this is a very interesting combination, because in weekly research we said that, well guys, take a look at market has formed scalp, very short-term bullish sentiment, because this was some kind of the stop grabber, not the stop grabber, but some kinds of the wash and rinse with these lows. So market has dropped, grabbed the stops below these lows, and returned it back up again inside of the triangle. If market is really bullish, market should continue move higher, but this hasn't happened. And instead of that, market has returned right back down again, has moved below, has dropped out from this triangle and almost taken out of this low. So this is double bearish action. Not just because market hasn't continued to move higher, but also because it has dropped right back down again to these lows. So this action looks very bearish. What else we see here? Market has dropped below monthly pivot support 1. This is bearish sign, and it indicates that probably this action is not just a retracement. So last week we could say that probably it could be treated as a retracement, since market was able to hold above. But right now market stands below it. Also, market is dropping below the yearly pivot point. Those of you guys who are tracking our weekly researches probably should remember that once we have talked about the price behavior between the yearly pivots. Why I am speaking about the dropping below yearly pivot point? Because on the way up, when the market stands on the upward trend in the current year, and has reached the area around 116, market wasn't able to reach the yearly pivot resistance one, and then turned down, and right now is dropping below the yearly pivot point. This combination looks bearish because normally retracement should reach the yearly pivot resistance one. This market wasn't able to reach it, and right now is dropping below yearly pivot point. This means that sentiment on the market shifting to the bearish, and some despair is appearing among traders that they have no power to push market again to the upside. In such circumstance, very probable next target is yearly pivot support one that stands lower and somewhere around the parity. So that's why from that standpoint, even from the long time charts, this moving below yearly pivot currently looks bearish. But this drop, of course, is too small for talking around about the scale of the yearly pivot point. It probably will take some time. This market should drop below this area and hold there, but right now you can see market is dropping lower. So on the daily chart, we are returning back to our target. So this butterfly that we have discussed last week, 1080 area. So major fib support and the 127 extension of the butterfly. This is also, guys, is our invalidation point for reverse hand shoulders pattern, because take a look, the bottom of the left shoulder stands approximately at this fib support. So if market will drop below it and will hold there, it will mean that this head and shoulders has failed, and the failure head and shoulders suggest failure at the bottom of the head. Failure at the bottom of the head, as we have talked about it already, will lead market to the further drop to the 1/5 area. In general, this action already looks like the failure of the head and shoulders, because market wasn't able even to reach the neckline. So it has tested, starting to form the shoulder, but price never have returned back, and market hasn't tested the neckline. It hasn't completed even the shoulder. That's why it seems important. So, but butterfly is reversal pattern, and at least market currently keeps at least the theoretical chances to reverse up. Okay, although we do not believe it too much with this about this scenario, but let's just let's do not predict any action that could happen here, but just wait and see what will happen. So as soon as we'll get the breakout here, this will become a very important moment for us. And as chances for rate hike is growing, as you know, the Fed fund rate futures shows the probability of the rate hike now stands about the 70% in December futures. So it presses on the euro currency. On the intraday charts, guys, what we have on the hourly chart, you could see that we also could speak about this butterfly. It's very small. It's based on the recent non-farm payrolls action, and the market, as you can see, even wasn't able to take it out of this top. So if you will take a look at this A, B, C bottom pattern, you will see the market wasn't able even to reach the minor 618 extension. This also looks bearish. 618 extension stands slightly higher than this top, and market on Monday wasn't able to continue move higher and drop. Right now this ABCD has been erased since market dropped below the C point, and we could speak about this butterfly. What's interesting is that this butterfly has the same targets. 127 is approximately 1080 area. So take a look at the daily chart. 1080 area stands right there at the 618 support and the 127 extension of this butterfly. So that's why currently we are watching for this drop, but we expect that today market will continue dropping and should reach this target. On the hourly chart, we also see that market is dropping below weekly pivot support one. This also shows the bearish sentiment in the market. So right now, let's keep watching. So very short-term perspective stands according with our weekly analysis, and it suggests reaching this area. What we will be watching for today. After that, we need to see what will happen here. So market will drop it, then we're starting to search the chance for taking medium-term short position on the euro currency.